Hello there, waiting is over. The message for today's video is waiting is over both in the general stock market as well as the precious metals market. Let's start with the general stock market. This is S&P 500 in front of you. Zooming out historically, intermediate cycles in this S&P 500 do last for around a half a year sometimes. Perhaps the average is a bit longer than that. Within those intermediate cycles, there are daily cycles that last for about a couple of months or so. The message of today's video for the general stock market is that back on the 13th of January, we might have actually seen both the daily cycle as well as the end of the intermediate cycle in S&P 500. And yes, we have a bit of a gap here. Yes, most gaps do get filled. So yes, perhaps in another couple of weeks, that's just in time for the Fed meeting, we might see that gap filled as the Fed is not raising rates. Although I don't expect a significant decline once the Fed announces that the rates are maintained, because the market is mostly pricing it in. There is a 97.3% chance, according to the market, that the rates are not going to be decreased. So perhaps a gap fill, but general direction from here is up into a new intermediate cycle. Perhaps the formation of some sort of an inverted head and shoulders over the next couple of weeks, which we know of course is technically a bullish sign. Looking at RSI, it has reached as low as 37. It's not actually very low. It hasn't even dipped into oversold area, but it might have dropped enough for this intermediate cycle correction, finally reaching intermediate cycle low. And of course, there is always a possibility of a black swan event. We might see the intermediate cycle low much closer to the 200-day moving average, if let's say there is some sort of uncertainty with the transition to the new administration. But barring such a black swan event, there is probably 70 to 75% chance that we have seen the intermediate cycle low. Although it is a little bit early, only 161 days into this intermediate cycle, which usually lasts for around a half a year on the general stock market. Next, looking at the market sentiment, let's look at smart money as well as dumb money confidence. Smart money confidence is the blue line, red line is the dumb money confidence. We usually want to buy the spikes in smart money confidence, for example, this pandemic low. So as you see, generally the spikes do coincide with some sort of intermediate cycle lows. Zooming in a little, we see that the smart money confidence has spiked. Yes, this spike isn't particularly high, but what I usually look for is for the smart money confidence to at least cross above 0.5, and it has reached 0.53 recently. And another thing that I usually look for, that's been one of the reliable indicators, is for the dumb money and smart money confidence to cross over, which they have done again over the last several weeks. So while nobody does know the future, looking at the technicals, looking at how history rhymes, even though it doesn't repeat, looking at market sentiment, we see that there is pretty good chance that if we haven't seen the intermediate cycle low on the general stock market on the 30th of January, we are not far from one. Especially with a new administration coming in next week, perhaps with a lot of promises for the first 100 days, helping the stock market to push significantly higher soon. Next, let's move on to gold, but first I do want to have a look at dollar. Usually the US dollar and gold are sort of negatively correlated. Although yes, this negative correlation hasn't been that consistent in the recent times. If we zoom out a little back to the pandemic low and compare the US dollar with gold over here, we still see that often they still do move inversely to each other. Second half of 2020, gold is rising while dollar is dropping. 2021, a couple of intermediate cycles in gold are more or less a mirror image of what was happening to dollar. Yes, some positive correlation in the first half of 2022, but in the second half of 2022, again, dollar and gold are sort of mirror images of each other. Same again in the second half of 2023. Then again, a bit of a positive correlation in early 2024. And zooming in a little, June to October last year, we see gold rising while dollar was falling. And since October, as dollar has strengthened, the rise in gold has sort of slowed down to this triangle. We'll come back to the gold triangle in a minute. Before that, let's look at the dollar cycles. The intermediate cycle is 113 days and the daily cycle is 41 days long. The daily cycles last for around a couple of months, so this cycle is far from being young. It's quite likely that it has already started declining down at least into the daily cycle low, if not intermediate cycle low. Another thing you notice here is a negative divergence on RSI. That's a situation where higher high on price is accompanied by lower high on RSI, which usually precedes some sort of a decline. And while negative correlation between dollar and gold hasn't been that consistent lately, still, if dollar does turn out to be relatively weaker over the next couple of weeks, that might actually help gold to break convincingly out of its triangle consolidation. So here's that triangle that we decided to come back to. This head and shoulders formation, as time moves on, there is just less and less chance that gold will drop down into that true intermediate cycle low. That would give us an insanely unusually long intermediate cycle lasting for over 200 something days. So it's much more likely now that we have actually seen the intermediate cycle over here in the middle of November. Back then, it wasn't a bad idea to wait and see what happens, because this decline down into the intermediate cycle low wasn't that severe, and additionally it has produced a relatively short intermediate cycle lasting for only 141 days. So again, while nobody knows the future and some sort of a black swan event might actually bring us down into this true intermediate cycle low, with the intermediate cycle lasting for over 220 days, we have seen such long intermediate cycles historically. That's after the pandemic crash and in 2022, but it's getting less and less likely. Hence, there's probably 70 to 75% chance that we have seen this intermediate cycle low back in the middle of November. Luckily, since then, gold has just been consolidating sideways, sort of within this triangle consolidation. Now, though, it looks like it's about to break out of this triangle. And we don't want gold to run away from us. So one strategy, quite a viable strategy, is to just enter around here with a bit of a stop loss either below some of the recent lows or below the 50-day moving average. That gives you a position in precious metals if gold is ready to continue into a new intermediate cycle, as I think it is, and it gives you a protection in case if we do drop down into a true intermediate cycle low. And lastly, looking at the market sentiment in gold and precious metals, it too follows these longer term multiple year cycles. There are hard times, as in say 2022 and early 2023. That's when the intermediate cycles in gold are accompanied by the market sentiment dropping down below the level of 40, much closer to the level of 30. And there are good times, as in say second half of 2020 and all through 2021, when the intermediate cycles in gold are accompanied by the market sentiment only dropping down to the level of 50 or down to mid 40s. So waiting for at least a 50 on the market sentiment usually provides a bit of a safer entry point, but looks like the last couple of intermediate cycle lows weren't actually very scary for traders, investors. We see back in the middle of last year, the market sentiment only dropped to the mid 60s and back to the mid 60s again in the middle of November, accompanying that intermediate cycle low. Again, remember 70-75% chance of that. Nobody does know the future. So gold is most likely to continue higher from here. Early targets will be based on the height of this triangle, which is around $250. So a breakout, say from about 2,700 on gold, gives you the first target of around 2940, perhaps in another 2-3 months into the top of this new intermediate cycle. So that's all from me. Now back to you though. Are we going to break 3,000 this year? Let me know down in the comments below. And of course, remember to hit the like and share this video with your friends. For much more regular and detailed updates, make sure to join us at myfinancesteacher.org. Have a terrific Thursday. Bye bye.